At More, our investment philosophy is be boring, make money. Being boring means we ignore fads and think long-term. It means we embrace uncertainty and acknowledge the limits of what we know and can control. In a complex world, being boring means remaining focused and consistent in our actions to help put the odds in our clients' favor.
Our investment philosophy and approach hasn't changed in 50 years. Find good companies, run by good people, with good track records, and be careful about how much we pay for it. It's boring, but it works.
We look for businesses that have demonstrated track records of adding value for shareholders. Companies that ideally should be worth more every day and are run by excellent management teams. Excellent management teams are great capital allocators. They do what they say they're going to do. They mitigate risk, provide their people with meaningful leadership, and make good strategic decisions. A great management team will also persevere through challenging times and often provide surprises on the upside. We go the extra mile to talk to management teams before we invest. We believe devoting time to that extra layer of bottom-up due diligence can provide valuable insights. And once we have found a wealth-creating company with excellent management, we try to identify what it's actually worth, the intrinsic value. Essentially, what turns a great company into a great investment.
Trying to predict the economy's future or ascribe certainty to any one outcome, that's just exceptionally difficult. We don't believe we can do that with any degree of statistically significant success. Markets are complex adaptive systems. Any number of events might influence the performance of a given investment. We think a more repeatable, intellectually honest and humble approach is focusing on where we believe we have an edge, the analysis of individual companies. We look closely at a company's vulnerabilities. Is the management team aligned? What does the balance sheet say? Does the stock price offer us a margin of safety? I like to use an analogy of a dry forest to describe our risk management efforts. In our investment journey, we want to avoid areas like dry forests, where just one economic spark could set everything on fire and zero your investments. Boring to us means staying resilient, and that requires us staying in the healthy parts of the forest by focusing on the fundamentals of a business.
We want to be a boring partner for our clients. This means being straightforward, transparent, and consistent. No roller coaster rides. We want clients to be comforted that every decision made around their portfolio is in alignment with our philosophy and their interests, that we are investing their money with the same care as we would our own. Our ultimate goal is to provide peace of mind.
We invest a lot of time and effort in our culture that's built on high trust, candor, and respect. We feel when there's the free flow of information that leads to much better decision-making, improved portfolio resiliency, and reduced risks for clients.
Life has enough ups and downs as it is. Our goal as investors is to find better returns with less risk, to build resilient, diverse portfolios from the bottom up that can stand the test of time.